Welcome to another Money Moves. We're here every Tuesday, and today we've got the big topic of discussion. Mortgage rates are going up, 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 and the question is, should you buy a house or should you hold off? We're going to get talking about that in just a few seconds, so do me a favor and grab a pen and paper and reach out to a quick friend and say, hey, jump on Black Swan Money, and let's get started. And we're back live. Welcome to Money Moves. It's Tuesday, 10 a.m. Central, 11 Eastern. So you know what time it is. It's time to talk about money and how you can make more of it, save more of it, protect it, and keep it from taxes as well. So Wendy, welcome back. Glad to have you here as always.
How was your weekend?
My weekend was actually really good. I was out in Phoenix over the weekend, having fun with a buddy of mine. Went out there for my celebration weekend. That's all I'm going to say. Today's a big day. And I'm not working other than on this video, so I wanted to be here for this. But yeah, so how was yours?
I was in the Dominican Republic, so I have to say it was kind of fun.
So you're kind of a one-upper right now is what I'm feeling. That's all I'm saying. Jeez, man. All right, whatever.
Yep.
First day today, so.
It was even better that I didn't have to be the one that paid for it. So
no, that's cool. Gotta like that. Again, this is what it's all about, folks. Asking questions on how can you make more money and things like that. So today, obviously, Whitney, you and I talked about this a little beforehand, and the housing market right now is slowing down. If not already slowed down in your area, it soon will. And the big driver behind it, well, obviously you've got inflation costs. We've talked about that. Everything's going up. But the big thing that impacts housing is what? Interest rates.
Interest rates. Yep.
Yeah. Right.
Out right now, John.
What's that?
Everyone's freaking out right now.
They are. I mean, right now for a 30-year fixed mortgage, you're looking at about 7.2. It's going to vary a little bit by where you're at. But, just a few short months ago, we were in the threes. We were half of where we're at today. Mm-hmm. And, obviously the Fed's doing what it can to stop inflation and slow it down. So they're increasing interest rates, which has created a screech on housing, auto industry, and everything else. But the question we're talking about today is, okay, should I buy the house or should I wait for rates to come back down? Right? I don't know. Have you heard of that or have you even thought about that?
Oh, yeah. Well, it's funny. I was talking to my girlfriend who's a realtor near where you live. She's awesome. She's been a realtor for years and years. And she's like, we had coffee a couple weeks ago. And she's like, people are freaking out. It's just back to normal. Like, this is what normal is. Like, what was happening was not normal with those low rates and people, paying cash for houses and like, you getting offers way over asking and who cares what the appraisal says. And like, that wasn't normal. What's happening now is normal.
Yeah, so. Exactly. And that's a great statement, especially when you can say, and the challenge with, America, right, is we have a very short memory span, right? Mm-hmm. When it comes to this stuff, you look at credit card usage, you look at interest rates, things like that. We remember it. It's like, oh my gosh, it was so painful. And then all of a sudden, 2 years later, it's like, what was that? Yeah, I don't remember. It's, oh, this is so great again. And, you look at the housing bubble of 2008, what happened, right? And things like that. We're kind of in that same situation. But the question is, should I buy or not? And, you look historically and going back to what you were talking about, a normal market. I remember when I first bought my house, and, I think the 30-year fix was about 8%, but they've been higher, right? And so I've got a screen. Let's pull that up. You look at that, and these are historical rates over the last, call it 30, 40, 50 years, right? And you can see right now, yes, they're on the upswing. Okay. But if you go back just a few short years, I mean, to 2008, we're about where we were, right? 2008, there you go. So 629, 626, July 17th, 2008, the, rates were the exact same, 6.29 versus 6.28. Okay, call it a few shekels there, but whatever. But so if you go back, go ahead. I'm sorry.
I bought in 2002. What's that say? I think I was around, I don't know. Part of me thinks 8 and part of me thinks 10. I can't remember how high.
Well, it wasn't 10. So it was, probably somewhere in there, that 7% range
Yeah.
for a 30-year fix. I mean, I don't know what mortgage you had or whatnot. I remember when I bought my first house back in 2000, right there, it was right around the end of 99 and I moved in the first of 2000. December 31st rates were at 8.0, whatever. Ours was 8% in our area. We ended up doing a 7-1 arm and got a point off. So it was a 7% for 7 years. And then it was adjustable after that. So, that's normal. I mean, what we've got here in this last, period from 2010, let's call it, to up until just a few short months ago was not a normal market. Okay. So what does that mean? Well, number one, the millennials are, up in arms about this because number one, they're the ones transitioning from that first home into, now we're having families, we want a bigger home and things like that. And the challenge is they've never been in the workforce when there's been a mortgage above 4%.
Mm-hmm.
And so they're like, whoa, this is crazy. This is insane. Not really. It's a normal market. You just end up put more money down, have the seller help with closing costs and buy the rate down a little bit, or whatever. But the thing is, you don't want to not buy because here's the real question. Over the next 10 years, do you think interest rates are going to continue to rise, stay where they're at today, or do you think they're going to go back down to 3%?
I mean, I'm sitting here looking at this chart and going, what year was that? It's too small on my screen. The 80s? Oh my gosh. Yeah. Right. So I'm thinking history repeats itself and we could possibly, especially with the current trends we're seeing, it could keep going up, I would think.
Yeah, I think it's definitely going to increase. I don't think it's going to go back to where it was in the 80s unless they just can't get the economy under control. And then it will. That's what happened in the 80s. So you look, this section here is when the millennials have been buying their houses, right? Their first homes. Right here, you have the Gen Xers buying their first homes. Okay. And then these were the baby boomers kind of buying their first homes and this crazy interest rate. I mean, you look at it, 18%. People were still buying houses. Why? Because real estate is typically always a good investment, right? Now, not every single time, you make your money when you buy the house, but the problem is right now, the millennial group is so locked onto the fact that mortgage rates should be at 3.5%.
Mm-hmm.
And they stop and they go into this analysis paralysis. A lot of people do this in your 401k and for the Gen Xers and boomers on the call here or on the YouTube, you look at this and it's like, okay, well, my 401k is losing. I can't sell because I don't want to lose what I have. Right.
Mm-hmm.
Or, and so it's like, it's almost that frozen mentality, that deer in the headlights mentality. And what happens is on the flip side of that, a year, 2, 3 years down the road, that's when you need a bigger house. You didn't pull the trigger back then.
Right.
Property values are still probably going up. Right. So now the house costs more. And oh, by the way, rates have gone up too. So now the house is even more expensive.
Mm-hmm.
So it's a missed opportunity and you missed out on making some huge gains there. So we can shut that off. But I just wanted to share that with everybody to kind of keep people in perspective. But, you look at that, okay, so this is going to be impacting primary residence.
Mm-hmm.
It's going to be impacting rental properties, and I don't see rentals going away because what's going on in the rental world is, 20 years ago, you either bought a home or you rented a home, right? And hopefully, the renters were like, well, I want to be in the buyer group. How do I get there? Right? Because that's an appreciating asset. Whether you're buying or renting, and I want you to hear me crystal clear on this, whether you are buying or renting, you are paying a mortgage.
Yeah.
It's just one, you're paying somebody else's mortgage, that's the renter, or you're paying your own mortgage and getting the benefits of that, the tax deductions, the growth, the equity, all that stuff. So you are never not paying a mortgage. Let's just be crystal clear on that. So the other side of the coin is looking at, okay, well, what's going on today? Well, now we've got a third group, the temporary rental or the Airbnb, VRBO, those rentals. Because think of how many condos, how many houses and stuff like that are being gobbled up and taken up by that, and now you've got groups even taking away from the rental market with Airbnb arbitrage, right? Temporary rental arbitrage, which is basically you rent a home and then turn around and Airbnb that rental out. You don't even own the home. And so that's really making an impact on rental rates and things like that. And so those rental rates are going higher and higher and higher. And so it's still mathematically a good idea to buy. Okay.
I mean, I think just what you said right there. I'm like, I've never heard anyone say that before. I mean, it's obviously logical, but yeah, you're paying a mortgage regardless. So, yeah, if you're able to buy a home, like I wouldn't delay. I'd be afraid the longer you wait, the harder it's going to be to get what you want and to keep the rates what they are now.
Yeah.
You know?
And I'm going to say, and I've heard this a couple places, so I'm not the one like the crystal ball, but I agree 100% with this. These next few years are going to be some of the best times to buy a house. Okay. Foreclosures are already on the rise, even though you're not hearing about it, right? Because people are getting laid off, and they didn't, when the times were good, right? They weren't squirreling away money, putting away emergency fund and stuff like that, which that's all the stuff we try to help people with, but they didn't do it. And so now all of a sudden they lose a job or this, that, or the other, and now they can't afford their mortgage. So now they lose the home, they go into the rental world. Well, those houses are going to become available. And so if you're sitting back going, well, that's the house I want, it's a great price and this, that, and the other, even though it needs some work, but rates are at 6-7%. So I'm not buying until they get back down to 3%. You're messing up. I mean, there's always solutions to that. Buy today. Right. And, those are some things that, okay, I've got the asset, I've got the equity, and then you've got options down the road.
Yeah. Right. So if I buy today and in 2 years, the interest rates go back down, I have options, right? I can refinance or
no, that's exactly right. That's exactly right. I mean, buy today. And if the rates do end up going back down, you're going to do what everybody did, in the 2012, 2013, when rates started dropping down to 4%. I mean, I refinanced twice, because when I bought the house I'm in right now, I think I was at 7%. When I bought that, right around there, maybe a little above. Refinanced when it got down to 4.5%, and then it dropped again and continued to drop. And I'm like, hey, it's a whole other point lower. Let's refinance again, right? And the closing costs and things like that all made sense. So it's like, boom, there you go. Maybe pull a little equity out at the point, because the house value has been going up. But if you don't pull the trigger on buying the property, you don't have any of those options.
Right.
And like I said before, whether you're renting today or paying a mortgage today, in both cases, you're paying a mortgage. One, you're paying yours. The other, you're paying somebody else's mortgage. So why not have it to where it's your mortgage? And as Wendy said, if things happen and rates do end up going back down, I don't see that happening. But if they do, you're not left out in the cold. You have options. But if you don't buy and rates continue to go up, you are left out in the cold.
Yeah.
So.
Good. All right, I'm buying a house. Let's go.
There you go, man. So no, it's just, everybody take a breath, calm down, relax, run your numbers again. And there's a lot of creative financing out there too. As far as, we're not talking the subprime stuff back in the 2008, but there's ways to, they're doing 80/20s, things like that, or 80/15s, where you're coming in with a lower amount. If you're a first-time home buyer, FHA is still a great option. You've got a low down payment there, but you're getting into the house and you're building that equity and things like that. And it's equity for you. So for the millennials out there, especially, don't be intimidated by what's going on right now. You saw the data. I mean, this is, we're going back to normal. That's all it is. You were just unfortunate enough that when you came onto the working scene and the buying scene, that rates were so low. So you think that's normal, but it's not. But don't get frozen. Don't get analysis paralysis. Don't get left behind. Go out, find your house, buy your house, and start building equity. And like when he said, if rates go back down, you've got options. So that's all I've got. I don't know if do you have anything else to add on that?
One more thing before we go.
Yeah.
And that's say happy birthday.
Thank you.
Yeah.
Thank you. Yep.
So if you guys are watching, give a shout out, say happy birthday to John Cleaver below. 35 years young, right, John?
There you go. I'm going to go with it. These are highlights, by the way. So I pay good money for this. But anyway, thanks again. I appreciate that. And like I said, every Tuesday we're here, folks. If you got some value out of this, and I want to thank our YouTube watchers too, people coming in after the fact, because we have all of our videos on replay. All you've got to do is go to blackswanmoney.com, and you can catch all 74 videos that we've got now on different ways that you can make more money, save more money, put more money away, how to get out of debt, things like that, how to protect your money, and how to grow your money. Okay. There are ways out there that you've probably never even heard of. You can get market returns with hedges around them, so you don't lose when the market goes down. tax-free retirement. It's all possible for you, but not if you don't know about it. So that's what Black Swan Money exists for. So make sure if you got some value out of this video or any of our videos, share it. Give us a little like down below and click that subscribe button if you're watching us on YouTube, and show some love. We're just trying to get the word out there and educate people so we can save the middle class. So everybody have a great day. Thanks again for the birthday wish, Wendy, and I hope you have a fantastic week.
All right, you too. Bye, guys.
All right. Bye-bye.